Hey everyone, this is Al Hill from TradingSim.com. Today we're going to talk about the best moving average for day trading. Now, I know some of you out there may say, okay, how can you ever say something's the best? I get it. I get it. However, on TradingSim, we try to be very clear and direct. So if I had to pick one moving average, it would be the 10-period moving average, all right, simple moving average. Reason I say that is because it allows you to monitor the trend closely. However, it does not give the trend enough room to go against you to take a significant hit. So as you read through the article, you'll notice that we use the 10-period simple moving average to really keep us in breakout trades in the morning. So we want to keep the average pretty close so that, again, if things go against us, we quickly exit the trade. The other moving average we're going to cover later in this video is the 20-period moving average. Again, if I had to pick like my second favorite would be the 20-period. This again will allow you to have a little more wiggle room in your trade. But if you go this route, you want to trade less volatile stocks, right? Because if a stock's up 20+% and you're looking at the 20-period MA, it can go against you quite significantly. Okay, so in this example, we're going to take a look at ORMP. Let's go ahead and hit play on this. So you have a morning setup here. This is our 10-period moving average we have in the blue line. So we're going to put a buy stop order up here. What's the 1758 or so? All right, let's just go ahead and let's actually just put a market order in. Okay, so we have a 1,000 long at 1755. So as I also stated in the article, I had a tough time riding the averages. I'm not saying you can't figure it out, knock it out the park, but just for me personally, whenever I ride the averages, it would go against me. I had to sell half of the position, a third of the position. It was always very confusing. So the simple thing for me is to find a certain profit target, 1.5%, maybe 2%, put that order in and call it a night. And if it hits, great. So in this example, we have 1745 as our entry. We'll go up from here, call it 34 cents, 35 cents. So what's that? 75, 79. So let's call it 1779, put our limit order in. All right, to sell. All right. So as you can see, this one jumped pretty quickly. I mean, this is day trading, so things move pretty quickly here. And generally when I see spikes like that, a stock will come back and ultimately fill my position. So I'm not too worried about it. So, again, you kind of want to, again, monitor your activity. You can see here that we're a ways away from the 10-period moving average. Again, it's kind of keeping the trend. And so you always want to monitor this, right? If the stock's really trending sharply in your favor, it should never break this 10-period moving average. So let's fast forward here a little bit. See if we can't get a fill. Okay, good. All right, so we got a fill. All right, so let me go ahead over here. All right. So we're able to exit this position. You can see bought at 1745, exit at 1779. So let's go forward a little bit in time and see how this formation actually played out here a little bit. Okay, so you can see here the 10-period SMA is still nicely keeping the pattern. So this is what you want to look for. Again, the 10-period, really keeping the price in check. And the reason 10-period again is the most popular is that moving averages, I would dare to say, are the most popular on chart indicator, not off chart but on chart. And your 10-period is a solid round number, 10 periods. So don't waste your time fooling around typing in these random moving averages of like I see guys doing stuff like they want to pick like the 33rd moving average and stuff like this, right? I mean, these random numbers, they may sound really complicated and really really fancy, but in reality, trading is pretty simple if you keep it simple. So just use standard values, right, when configuring your simple moving average. All right, so let's shift gears over to the 20-period SMA. Let's walk through an example of that. Now, this is an example of KNDI, and we have the 20-period moving average upwards, as you can see here. So So what the 20 period moving average will do for you as a trader, right? In the morning, you're going to have this kind of volatile action. If you're trading with a 10 period MA, in this zone here, the 10 period would have you exiting out as the stock goes flat. The beauty of the 20 period MA, for those of you that want to try to capture stocks that trend all day, and or just want to have a little more wiggle room. In this example, this is more around trending all day, right? The 20 period will allow the stock enough room for consolidation periods and then continuation later in the day. So, assuming you were to buy this breakout here in the morning at, what's this, 12:39, you could have pretty much held this entire trade. Now, some people have very strict rules around the body closes below the MA, they quickly exit. I don't really follow that sort of strict logic because stocks, they'll test levels, go above and below, kind of, shaking the, shaking feathers a little bit to see really, who's going to hold on, who's going to bail. So in this example, again, not a convincing break. So if you had held on to this position, then you would have really reaped some pretty solid rewards. And the 20 period, again, will afford you the flexibility to really let the trend play out. And just to make sure everyone's clear, again, this is not my strong suit. I tend to do the breakouts in the morning, hit my profit target, exit. But for those of you that you don't mind the whipsaw back and forth, and you can take 2 or 3 losers, maybe 5 or 6 losers in a row, or 5 or 6 flat trades before you get this big one. If you can mentally handle that, then definitely a 20 period moving average would be a great addition to your trading system. So let's take a look at another example. Okay, let's take a look here at GTN. Stocks breaking down. So we're going to go ahead and short 1,000 shares at market. All right, so we get a fill at 12.55. Let's fast forward this action here because I really want to show you how the 20 period moving average can kind of keep things in check here. So as you can see, the stock, after this break here, started to go flat, right? So if you're in a 10 period moving average, you're going to get stopped out here, point blank. But as you see, the 20 period really prevented a move up, and then the stock starts to trend lower. And again, this is a low volatility play. You can see you're only up like 1.6%. Looks like the thing's cratering here. So again, the 20 period moving average, you want to go low volatility in terms of the stocks you look into. As you can see, you get a bigger break here, and 5%, right? So again, this break here on a 10 period moving average, you never would have been able to really eat that break because just the 10 period just would have stopped you out with this consolidation. So just to be clear, right, there's no right or wrong answer. All right, I prefer 10. My definition of that is just it's the most popular, right, because it's just a shorter time frame, active traders. But if you're a low volatility person, right, and you're not looking to mix it up and really get wild with this trading thing, and you really want to keep things simple, and again, low volatility stocks, and the 20 period moving average is great. Okay, it's going to afford you the ability to sit through these little sideways actions, not overreact, and then kind of reap these larger gains. But again, you need to have the appetite for the increased risk, right? Because a lot of times when you get these kind of consolidation moves after a down move or up move, things are generally going to go the other way, right? So you need to have the appetite for the risk, and you need to avoid high flying or stocks that are tanking, right? Because if you have 8% between your price and the moving average, and your stop is that moving average, then that means you're risking 8% of your capital in the trade. Okay, so I hope this was helpful. If you have any more questions, feel free to use our contact us form, and please go back to our homepage, check out our offerings with tradingsim.com, and also click the features link in the bottom of the footer of the site. You'll see a ton of videos explaining some of the key features of the application. All right, good luck trading.